All right, open up to page 240. 240. In the previous chapters, we talked about a business being a one-person show. Kind of like Zacchaeus having a lawn mowing company, right? One person, and you get customers, and you perform a service. Now, we're moving into something totally different. Okay, so we finished the halfway point in a way, and now we move out of the easy stuff and into the much more complicated. All right, so look at page 241. That chart of accounts. Oh my goodness, what do you see on there that you don't recognize compared to what we had before? Callie?
Plant assets.
Right, plant assets, good, what else?
Stockholders' equity.
Ooh, stockholders' equity, yep, we're gonna talk about that.
Current assets.
Okay, yep. So kind of break the assets down into a couple categories. Some look familiar. We have revenue, right, sales, that looks familiar. And of course we have a cash account, petty cash, accounts receivable, those look familiar. Merchandise, inventory, that's a new one. What category is that under? Assets, good. And then over on the right-hand column, we have cost of goods sold. We've never seen that one before. That's interesting. Purchases, and we have operating expenses. A lot of those look familiar, although they add payroll taxes. Salary expense, that's new. Income tax, federal income tax. Okay, we got some new things here. Oh, and then there's a whole section called subsidiary ledgers. And we have two kinds, accounts receivable, that sounds familiar, and accounts payable. But those numbers look different. Look at accounts receivable. Notice that all of those companies have a 3-digit number, right? And they all start with 1. And then notice the accounts payable ledger, those are also names of companies. And they all have a 3-digit number, and they start with 2. Oh boy. All right. So we're gonna wade into this, but we're gonna wade way in today. You did the easy stuff yesterday, and you're done with the easy stuff. Now we're ready to get into the thick of it. All right, so on page 244, it talks about a merchandising business. So the contrast here is in previous modules, previous chapters, we were doing a service business. Designing websites, mowing lawns, cleaning houses, walking dogs, okay? But you're not having to buy much except for a few supplies, buy gasoline, things like that, expenses. But picture our church bookstore. You guys ever been in there to go shopping in the bookstore? Okay? All of the stuff that's for sale on the shelves is called merchandise. And it has to be purchased in advance, and we purchase it from a supply house at a discount. So we're not going to sell it for the same price we bought it for, because the whole goal is to mark it up and make some money, right? So let's say they buy the CDs for Majesty Music for $7.50. Well, then you can turn around and sell it for $15. And then if you have a sale, you can sell it for $10 and still be making some money on it, okay? So the stuff that you buy, the merchandise that you buy to sell, follow this is a new term, is called purchases. It's a very specific term. Now you think every time you go to buy lunch, you're making a purchase. Every time you go to buy paper for your store, buying supplies, you're making a purchase. That's not a purchase. From now on, Purchases only refers to buying merchandise that you're going to put on the shelves for sale in your store. Okay? So Miss Becky Follett runs the bookstore. She buys from Majesty Music. She buys things from Pastor Sargent's ministry, Way of Life. I mean, not Way of Life, but whatever it is. From Oak Harbor. They buy books and Bible studies and things from them. There's a Riverside company that sells lots of Bibles. And all of those supply houses, she buys things at a discount. Those are called purchases, and then you put them on the shelf. So, when you add up, if you went around with a clipboard and you counted up every Bible and the value of the Bibles, and every CD and the value, and all the books and the value of all the books, and you add it all up, that would be a pretty big number, wouldn't it? That is called the inventory, okay? And that's the value of the merchandise. Okay? So we got to get these new terms in our head. And every year they do that inventory process in the big stores. Now, thankfully today, most big stores have some kind of a computer program that as soon as you buy an item, they scan a barcode and they subtract that from their inventory. But back in the olden days, before they could do that, they would have to literally go around with a clipboard and count everything and figure out what the value was. But all of that is an asset, okay? Now, so the people that you buy from, the supply houses, those are called vendors. So you buy from this vendor Bibles, you buy from this vendor music, you buy from this vendor books. So these are vendors. But we have to keep track of, what did I order from them? What did they actually send me? How much do I owe them? Did I pay them off? Okay, so we have to, that's a big accounting process just there, keeping track of vendors. So that's what we did on page 246, okay? Go to page 246. You've seen accounts payable before, okay? And in the previous easier chapters, we just would list the 2 or 3 vendors. But here we could easily have 5 or 10 or 20 vendors. So each vendor will have its own card. So the top of page 247 shows Bearden Chemicals. That is a company that we're buying stuff from. And we have a total that we owe to them. Okay? But if you added up the total that you owe to Bearden Chemicals and to SD Supply and Galley Electric and Mobley Tools and all of those, and you add them all up, so they have a ticker tape there adding them up, then just that one number would end up being put into accounts payable as one big amount of money that we owe to them. So we keep track of each vendor separately, and if we add them all up, that should be equal to or be the same as the accounts payable. So I think they had, and that's called a controlling account. So I think they had you create in your homework some subsidiary account cards for some companies, and that was super simple. All right, so now let's talk about page 249. Here we go. There's the word inventory and merchandise inventory on page 249. Perpetual inventory, that's when a company like at Home Depot, they do this. They scan everything as you buy it, so they hopefully are keeping track and know exactly how many of every item is actually on the shelf. Why would that number that the computer says they have on the shelf not actually match when you go to look? Yeah, it is.
Like stolen or misplaced items.
So you gave 2 reasons there. One, and that's a big one, stealing. People pocketing things. The other, though, is somebody takes it out of one bin, they call it, and then it doesn't get returned to the same bin. Or little toddlers came with their dad to go shopping at Home Depot, and they're playing with something. Dad says, put that back, and they just put it in a random bin. So it's not back in the right place. So when the next customer comes in and they want to buy 10 of whatever, and so, but your inventory says you have 12 of them. How come I can only find 9? Okay, so that's partly why. So then once a year, they probably still have to do a physical inventory and try to make what's actually in the store match what the computer says. Or it talks about a periodic physical inventory. Periodic could be monthly, more often it's definitely annually, okay? All right, page 250. The amount a business pays for goods it purchases to sell is called, okay, another important term there, cost of merchandise. Okay, 3 Green has chosen to use a periodic inventory system. When a periodic inventory system is used, the cost of merchandise is recorded to the purchases account. Purchases, okay, this is important. Purchases is increased by a debit and decreased by a credit, so it has a normal debit balance. Now, technically, it's not an asset. If you look back to that chart on page 240, what was that? 241. In fact, we're going to look back to this general ledger chart of accounts a lot. Cost of goods sold and purchases is a 5,000 account. See that right-hand column? So that's not under assets. But if you think of it in a way, it is kind of like assets because you bought it, you own it, and you can sell it. So it's worth something to you. You could either sell it or you could send it back to the vendor, or you could, somehow liquidate it, but it's worth something to you. So in a way, it's like an asset. So it doesn't hurt to think of it as an asset, just to remember that it is a debit. To increase it, credit, to decrease it. Okay, now let's look at page 251. So we're talking about this company called 3 Green. Is that the, yeah, on page 241, it's called 3 Green Products. Yeah, we're starting at 10:30 these days. Yeah, we're continuing that. 10:30. Okay, so we're already on page 251. But I'm making a video for the sick kids and the absent kids. So if you need to go back and watch it, you can. All right. So 3 Green here on this purchase order is the company who is ordering something. They're purchasing something that they're going to turn around and sell in their store. Okay? Who are they sending this purchase order to? Can you tell by looking at that form at the top of page 251?
3 Green.
No, that's the company that we're pretending we are. And we're sending this to the vendor to order something from the vendor. So who is the vendor?
Oh, wine lighting. Wine lighting.
I think it's Win.
Win Lighting. Okay, see on page 251 it says purchased from Win Lighting. And it says shipped to 3 Green. Oh, look at that, Harrisburg. Haha. All right, so notice some other things on here. We have a date, we have a purchase order number. It says exactly what we want to order, 200 of one, 150 of the other. They carry the unit price times the quantity over to the right-hand column and add it up. So a purchase order is saying, we want this from you. We're telling you, please send this to us. We want to sell it in our store. We need your product to sell in our store. That's a purchase order. Because remember, that word purchase does not mean I'm purchasing supplies. It does not mean I'm purchasing something for expenses. Purchases is only things that I'm going to turn around and sell. Okay, so as soon as I place that, go to page 252, I need to keep track of all the purchases. Okay? Now all of a sudden okay, purchase order. Okay, I want to turn the bottom of page 251. First of all, it says there's 5 special journals we're going to talk about. In the past, we only used one. It was called a general journal. Okay, are you with me on the bottom of page 251? We're going to talk right now about the purchases journal. And then there's a thing called the cash payments journal. And then there's a sales journal for all sales of merchandise on account. Cash receipts journal, those are for customers who pay in cash. And then there's a general journal, which we're familiar with that already. All right. So turning the page, in a purchases journal, we keep track of the vendor that we're buying from, and the there's a purchase number, post ref, that should sound familiar. But then here's something we've never seen before. They have one amount column, but they have two titles above it. You see that? It says purchases DR and accounts payable CR. What does DR stand for?
Debit.
Debit, and CR stands for credit. So we only have to write down the number once. We don't have to do it twice. So it's a shortcut. Okay? When a vendor sells merchandise to a buyer, the vendor prepares an invoice showing what has been sold. An invoice used as a source document for recording a purchase on account transaction is called a purchase invoice. So it looks like we do not record from the purchase order. So they're just telling us in the background the purchase order gets sent off. We keep track of it, but it's not part of the accounting system until they actually send us the merchandise. And then they will send us an invoice on the top of page 253, shows an invoice, and this is for those same light bulbs that we ordered. Now notice it's coming from Win Lighting, that's the vendor. And the amount matches what we were expecting. They have a date on there and an invoice number. But then, notice that gray thing, okay? That kind of looks like a stamp, stamped on the top of the invoice. It says received, and then there's 3 letters. That's probably the initials of the person who wrote it in, the bookkeeper. They wrote in a date. Notice it's not the same as the date the invoice was dated because it's the date they received it. And then it says document. Now the 525 does not match the invoice number and it does not match the purchase order number. And that's because in our purchases journal, we're going to take whatever the very next number is, and we, in the order that the invoices come in, we record, okay, this is the next invoice that came in, so we write down 525. The next one will be 526. The next one that comes in is 527. And then every single one of these is going to be recorded in the purchases journal. So let's see how we record it. Purchasing merchandise on account. Notice there's the date, the 6th, that's the date it was received. Win Lighting, okay. The purchase number is the number that was written on that little stamp. And then the amount is the total, $1,082.50. We only have to write it one time. So purchases is being debited. Remember we said it's kind of like an asset. It's stuff we're going to sell in the store, so it's worth something to us. And then the account that's being credited, and this should make sense, is accounts payable. And accounts payable is a liability, right? So we expect that to be a credit. All right. Let's get out your work together, 9-2, and let's start that. Let me, and then I'll come around and check your 9-1 work together and on your own. So let's see, this would be page 199, right? Okay, so let's just take a quick peek at page 199. On the top we have what's called the purchases journal, and then below that we have a cash payments journal. We haven't talked about cash payments yet, so I don't think we're going to use that. This whole page is going to help us do 9.2, 9.3, 9.4, and 9.5. So we're only, I think, going to use the purchases journal initially here. Okay, so let's look at Journaling purchases, the purchases for journal, for Golden Fabrics is given in the working papers. Use October of the current year to journalize these transactions on page what?
10.
10 of the purchases journal. Okay, so let's get your page number on your purchases journal. Put in the year and the month, transaction 2. October 2nd, purchased merchandise on account from Pacific Supply. And they have the amount and the purchase invoice number. Okay, so go ahead and record that.